Alright, I'm just going to do a quick video here. I want to do a comparison on two different ticker symbols. So this will be on the left hand side of the screen is going to be Dunkin' Brands. That's ticker symbol DNKN. And then on the right hand side is going to be Starbucks, and that's ticker symbol SBUX. And currently I have the yearly chart or 1 year and 1 day chart up on the screen, and then I'm just going to go ahead and dive into each. Just starting off, Starbucks is roughly up about 30% year to date, while the Dunkin' Brands is up about 17% on year to date. Some other notable facts here on both of these companies. The Dunkin' Brands has a market cap around $7 billion, while Starbucks is right around the $99 billion mark. Along with the volume here on Dunkin' is about, I think it averages around the 600,000 to 1 million shares per day, while Starbucks is closer to about the 6 million shares per day as far as volume is concerned. So just wanted to point those things out. Currently, the Dunkin' Brands is trading around $75, while Starbucks is right around this $84 price point. And you can see both are coming off of highs. Dunkin' being around the $85 price point, and Starbucks around $100 per share, hitting that after earnings back in late July. So we're going to go ahead and just look at the Dunkin' Brands on its own. So we'll go ahead and flip the chart over to that, take it out just a little bit, and then I'm going to move into a weekly chart. Move it back a little bit further, just so you guys can kind of see where I have these two lines made. So basically this upward trend, I drew in this bottom line right here and then just copied it and made our upper bounds. This is kind of like an Andrew's pitchfork, just making this nice little channel in here. And you can see most of the time when we trade above this upper channel, we eventually reject the price kind of quickly, and we go from one side of the channel straight down to the other quite quickly. We can see we're coming off of that same trend here on Dunkin', and it could be possible that we start to see a swing back up if we see some nice consolidation. You can see the PPO down here looks as if it is starting to level out, maybe even curl up to the upside. If we move it in a little bit tighter, you can see these past, say, 4 weeks or so have just been kind of a whipsaw pattern moving back and forth. So it'll kind of, we'll see with this week and moving into next how this plays out. But from my standpoint, it looks as if we have some nice support back down in here, right around this $73 range. You can see all the trading that we had back here. We saw it as a bottom right here in April, moving into May of this year. And you can see we bounced off of it a few times over the past few weeks. So the question will be, if we start to move to the downside, coming off of a red week last week, if we start to move to the downside, will we hold the previous lows that we set in place? So I'm going to go to a daily chart here, and you can kind of see more of the detail that I'm talking about. So we came down, we bounced around this $73 price point, popped back up, bounced back down right around it, and now we are starting to deteriorate back down to it. So what I would want to see is maybe us put in a higher low, maybe right here in the high 73s. and then take it from there and move higher. That might be a positive sign that we're seeing more buyers step in to see us set a higher low. If we come down here and we start playing around with the low 73s, I would have a better feeling that we would continue to the downward side, setting lower lows and maybe testing this bottom trend line or the bottom end of this channel. So we'll just kind of have to play it out. Right now I'm looking right around this high 73 mark to see if buyers are stepping in there and if it might be a good spot to buy in. If we see a nice little boot and rally from there. If not, I'm going to look to see if we hold the low 73s or right at the 73 mark. And if we do not hold there, look to see this bottom end of the channel. To the upside, if we start to swing higher, I want to see us break through, call it the 76.60 or 76.50 level. It seems as if whenever we get around that area, we can't seem to close above it. I'd really like to see a close above it, closing above this 50-day EMA as well. Here on the daily, I think that would show positive signs that we could be starting to consolidate and curl back up to the upside, and maybe as we move into next year, sometime early in the first quarter, attempt to get back up here around $81 to $85 a share here on Dunkin'. So that's just my brief little overview on it. Now I'll go ahead and swing into StarBucks. So again, this is ticker symbol SBUX. And the reason that StarBucks has caught my eye is I set an alert for StarBucks a good while back. I want to say it was back in probably around April when we saw this pop through. I didn't know. I was hoping to come back down and catch a bounce right around here around $79. Because we had traded up, we hit 79, sold back down, and then popped through it. And I was hoping to get it as it pulled back, and I never did. And so I missed out on this nice little run to the upside, up to about $100 a share. But now we are starting to see the price pull back down again. I didn't want to chase this. Now I could have bought in at anywhere here and still made a good 20%, but hindsight is 20/20. So moving forward, I am going to be looking to see what the best trade can be. So now as we begin to near this $79 price point again, I'm going to look to see what the price does. So we're already down a good, say, 17%. We actually got close to 20, about 19% off of these highs from late July, early August. So I'm just looking to see us consolidate. I want to see us consolidate and start to make some upward movement. I think that StarBucks in the future will break through and make new highs, but I don't want to get caught in a scenario where, let's say, I get in here around $84 a share, and then we start to see this break back down. We start to see these moving averages push the price back down closer to the $77 price point. That would put me at roughly a 7.5% loss, which that's where I would ideally want to get in. Would be down here around $77 a share, given that maybe at that point we start to see some consolidation. But that's really what I'm looking for, is some sort of confirmation that's going to give me confidence if we start to move through these 50-day, 100-day, 200-day. If we start to consolidate and slowly make higher lows, that would give me the confidence that we can continue higher and move closer to this all-time high, maybe break through $100 a share. Now along the way, I do think there's going to be some resistance. I'll go ahead and just chalk in some lines for now. We'll be looking around $87.50. That'll be a resistance, and then up here around $90 a share. You can see that we broke through it back here in July, and then held on it for a couple of days before popping to the all-time high, and then on the way back down we also held that level for a period of time before finally breaking down and going below it. So first, $87.50, then $90 a share, and then I want to put it up here, probably in the high 94s, high to mid 94s. And the reason I don't want to go up to 95 is because we can see that we've got some wicks down here, so it's not like we were just bouncing on 95. We actually traded below it for a period of time, so I wanna move that down and be a little bit more conservative. You could even probably move it a little bit lower down to 94, the high 93s, if you wanted to. But I think that that's a good level, especially if we start to see some momentum. This really starts to move. The closer that we get to this this high back here at $99 a share, I think that people might start to push through, depending on how the market is doing as well. People might try to push this through $100 a share, and at that point, we'd be looking at a pretty good, 17% gain. But for now, I still want to see if there's going to be a good solid confirmation that we're going to either break over this 50-day moving average, or at least consolidate in this, say, $82 price point, or around this $82 price point. Because if we start to reject these levels and we start moving lower, I would be more interested to see it down here in the $77 range. But that is just my opinion. If we go ahead and look at this on a shorter time frame, on the 4-hour, you can start to see that we are looking as if we are going to consolidate. We have these moving averages, both the 50 and the 100, now intertwined, and we're closing in on the 200, which we haven't cracked above in a few months now, so that'll be impressive. If we can start to move up above that, that might be a good signal that it is time to buy, or at least to enter into your position and maybe add more if it starts to climb. I just don't want to get in too early and maybe see this thing flop like it's a false breakout, that we break above the 200 and then it sells back down towards the $79 price point. If that were to occur, if I were to get in, if the signs looked right and it lined up with my trading strategy and I got in and then it started to break to the downside, I would have a stop loss in place that would keep me from losing, say, whatever that is, 6%. I'd probably set my stop somewhere right in here. But again, I'm looking, for the time being, I'm looking to get in a little bit lower, but we'll see how this plays out. Overall, this Starbucks trade would be more of a multi-month trade. I don't think that this is going to move up very quick, but I think it'll be something along the same lines of how we came down, and it might just be a nice little bull and we swing back to the upside. But I'm looking at this being a multi-month into the first quarter of next year, while the Dunkin' trade, if I were to take that on, that would be more of a short-term time frame to get up. My target price was right around here, around $80 a share, before seeing some sort of significant resistance, just because there's a lot more trading that went on in here, and I don't think that we are going to see the price rocket back up. So, I mean, if you got in where we're sitting now, looking at about a 6.5% gain. If you were to take it to the all-time highs, it's about 11.5% gain. So Starbucks is a little bit better when it comes to the reward side. But I think right now this Dunkin' brand's DNKN is looking a little bit more stable. Not to say that Starbucks isn't a great company, but just from a stock trading perspective, it looks as if Dunkin', if we can set this higher low based off of this last drop down here in early November, that might be a good sign that we are going to continue pushing to the upside. So hopefully you guys found this helpful, and thank you guys for watching.